In this video, you're going to get to meet the owner of the Towers Motel right here on Ocean Boulevard in Myrtle Beach, South Carolina. We're going to do a beautiful interview where he drops golden nuggets. Having been in the hotel business since the 1970s, he's seen Myrtle Beach seasonality like no one else. Now, I'm going to ask him all the juicy questions that you want answered to learn as much as you can learn about owning and operating a hotel investment property, just like the one back behind me. Additionally, guys, I'm going to show you a pro forma, 6 years owning and operating this property, what you can sell it for. Yes, $2.7 million net sale proceeds once you sell this thing in year 6. I'm going to talk about online travel agencies and how the gentleman here that owns this motel doesn't use a single online travel agency, has a solid book of business, and brings in $500,000 a year. Yes, you heard me. We're also going to talk about the potential on the table there. You know, how much more could you bring in if you added in Airbnb, VRBO, and Booking.com? Now, guys, I don't want to hold us up. Hit that like button, hit that subscribe button, and let's get into the video now. You'd like to invest in commercial real estate. I'd like to show you how these properties make profit and break down all their expenses so you understand how they operate, how they appreciate over time, and how this will impact your taxes. I'd also like to let you know the property's cap rate and how it compares with similar properties in the market, how the location best services its users, and the potential for future growth. I'd like to fill you in on the historical and future occupancy trends, as well as potential management structures affecting the investment. And we won't miss the investment's risk profile nor the best exit strategies. Yes, we'll cover the condition of the property, any value add potential and repositioning, but we'll also dive into special topics like customer base, market positioning, and marketing and booking strategies when it applies. And if you stay tuned until the end, I'll show you my top picks for the best commercial real estate deals that have generated the most annual profits, have the highest appreciation, and the best tax implications. So no matter if you're a first-time investor or a seasoned professional transitioning into the real estate game, or perhaps simply a casual investor looking to relocate to the beach to live, play, and invest so that the passive income can support you in your retirement years, whether you have 20% to pay down because you're financing or you're a cash buyer, if it's a commercial real estate investment that you're after, you'll be better because I'm aiming to give you a 10 times return on your time for watching my videos until the end. All right, Joe, talk to me about what made hotels such a good business for you over the last 50 years.
Oh my goodness, it's been a pleasure meeting all the new people. It's been a very successful adventure for us. We've catered mainly, tried to hold to the family guests, and now we're into the third and fourth generation of those same families which we started out with back in the 70s. So there's a lot of benefits in just catering to the families and couples, and that's been our kind of our go-to goal through the years.
For sure. Now, were you able to create any wealth here with this boutique hotel?
We've had a very successful life. We've put numerous kids through college.
Come on.
We bought some farmland. We have other rental properties. So yeah, it's been advantageous for us.
Wonderful. And now, you didn't take the approach of flipping like many other investors do. Why not?
Well, we didn't. We wanted to. We're working folks. We wanted something to occupy our time in a positive way, and so we didn't buy in with the idea of flipping it in a year or two. We bought into the Myrtle Beach family vacation, and we went to work.
Yeah, it sounds like it. I mean, over 60 years of hotel experience.
That's right.
Come on.
That's right.
And plenty of it right here on Ocean Boulevard. Now, what separates successful hotel owners from those who fail?
Well, I mean, there's failure in anything you go at. So you got to have that no quit attitude, and just push through. You're going to have negatives and you're going to have positives.
Did you have some bad years?
Yeah, we've had some bad. COVID was not a friend of a business area in Myrtle Beach anywhere, really. But we pushed through and we survived. It's that just not give up attitude you got to have in business.
Yeah. So, all right. So, but you obviously had many better years than bad years, right?
We've had Myrtle Beach has been very good to our family. We go back. I can go back with my aunts and uncles and grandfather. We actually go back to the 40s.
Wow.
Having beach property.
Now, yeah, I think oceanfront condos, or the oceanfront idea of vacationing here, started around the 1930s.
Right.
And so you've seen Myrtle Beach really evolve.
I have. When we bought in, a 6-story building was a high rise in Myrtle Beach. So,
Get out. And now today we have what?
You got 23, 24, 25 stories, and they're continuing to go up
Come
as
on.
new things are built.
Now, this particular property, the Towers Motel, why did you buy this one?
Its location. We've always we've had numerous hotels. We've liked the north end a little better than the south end, not for any particular reason. It's just been where my grandfather started out.
Yep.
And it's been good to us, so we stuck to the north end. When I was looking for properties, this one had a great ocean view. There was a lot of things being done in the city with new building. The Camelot was being built at that time, so it worked out great for us. We ended up with a better view than what we had when we bought it. When people come to the beach, they at least want to see the beach.
No
Not
doubt.
everybody cares to be on Oceanfront. There's times when Oceanfront can demand higher prices than Second Row, but we're able to survive with a good clientele, and people enjoy seeing the same folks when they come back. It's like a vacation reunion for a lot of them.
Oh, so you have a lot of year after year repeat guests?
We have a lot. That's pretty much 99% of our
Wow.
gig.
So you've got a solid book of business on this property.
Right.
Wonderful. Now, you've introduced a slew of topics that I have to pick your brain about. Now, all right, let's talk ocean view versus oceanfront, because that's what's controversial in a lot of investors' minds. A lot of investors think if it's not oceanfront, don't buy it. Obviously, you stand here with 20, 30 years of proof in this hotel that ocean view works and ocean view builds wealth here. Could you shed light on any major takeaways around that idea? Should an investor be so focused on oceanfront that they skip over the potential of ocean view second row deals like this?
Well, I think ocean view is a deciding factor if you're going to buy second row. You at least need the ocean view. You need good beach access. The boulevard, at times, it's a very entertaining street. People like to people watch. So they gather up and they sit on our pool deck and they just sit out here all day and watch people going back and forth on the boulevard. And you can have the ocean view as well. So it's I understand some people just want oceanfront, but there is an opportunity on second row to have ocean views.
Yep.
And second row properties, smaller properties, usually have a pool area that's not as crowded. There's nothing aggravating getting a jacuzzi and some little kid comes splash down in the middle while you're in there with your wife or whatnot. So smaller properties, not as crowded. It has its positives.
Yeah. So my question is there a secret niche section of the market that investors that are focused on oceanfront look over and miss? Like, are these the more budget friendly guests that don't care about being oceanfront, but they're maybe more stable and they're coming year after year after year, rather than with oceanfront you're having to catch new guests every single year? It's a lot more work. What do you think about that?
Well, you have to price. You can price yourself out of any market. Second row, We do, our prices are not, we're probably below some of the bigger resorts, but we're above a lot of them. Um, just because, I mean, you can't give away your stuff and
Yeah.
survive in the market.
Yeah.
We've been at it for over 30 some years and we're survived. So we
Yeah.
understand you got to pay your bills and you make money as well.
So there's a certain quality that you bring to the guest service here that maybe a lot of other second row or further back even hotels aren't bringing.
Right. We like to value our guests. Every guest is a opportunity for profit, and we treat them as such. And when they walk in the door, if it looks like somebody's going to take away from that value, we will ask them to leave.
Come on, get it.
And you know, that's just the way. That's just business.
That's
right.
What
you have to do.
Come on.
And our families appreciate that. I've been told some ruckus on the pool deck. I've asked people to leave, and you know, I've had just people tell me, "Thank you for doing that. Thank you for doing that." They don't get that in these bigger places.
No doubt. So, what has changed the most in Myrtle Beach hospitality since the 1970s? I mean, you've seen this place evolve and grow.
In the 70s, it was, I could probably name all the families on the north end who were in ownership. Now corporate has come in. You have, you know, you don't have the level of management that you had back in the 70s and even 80s, early 90s. It's all people, it's corporate fund. The owners, you know, they might visit once a year, they might not.
Yeah. So is that a good sign for our market that we've got so much interest?
It puts a unique opportunity in a smaller place like this that is management by the owner, where the owners are in and out every day, not necessarily living there, but they are connected to the business. And in a real way, not just a paperwork way.
Exactly. Now, are you concerned about oversupply? You know, you've been here since the 1970s. You've been in business for years here. Are you concerned that maybe there's too many oceanfront hotels, or this market is saturated, or is that even real for you?
Well, you know, you can't worry about the market. You have to worry about yourself and continue to put your customers first, and you'll survive. If you let the overall market consume your management skills, then there's going to be competition. You got to figure out a way that you can be competitive.
Have you ever beat anybody? Come on, give us a story or something. Come on, have you ever been in a dog fight?
At one time, we had in my brothers and sisters, we had 6 hotels, so there was a lot of competition between brothers and sisters.
Sibling rivalry.
And Christmas time was always very interesting, we'd say. But the competition among our family has been fun, and that keeps everybody, you know, it keeps the cutting edge, it keeps the razors sharp. So
no doubt, absolutely. That competition, that free market is how this thing rolls.
That's right.
Now, Kelly.
Yes.
Talk to us a little bit about some of what you see as far as tax advantages. Just a quick shift. Tax advantages for somebody potentially wanting to go after that value add route on a boutique hotel right here, Towers. Talk about that a little bit.
Yeah, so we there's obviously a lot of older hotels that can kind of fit that bucket of, you know, you can register something like this with the National Registry, in which that is going to give an owner and investor a tax advantage in any type of remodeling or things like that they want to do to the building, as long as they preserve the historical significance of the exterior. They don't do any major changes. There's a lot of these older hotels that are nostalgic and charming and have that flair to them that are really, really attractive to some investors that are coming into our market. It's really a need, honestly. And if you can also, you know, obtain some sort of financial advantage.
Well, and why
not?
Let's just dive into that. So Kelly was mentioning off camera how there's another hotel that recently took advantage of the historical tax credits. Now, diving a little bit deeper into that, essentially, if you were to rehab this building back to it's more historical date, and the building is at least, from the 1950s or older,
Yeah.
you can get these national and these state level historic credits. Now,
Absolutely.
these credits can be sold on an exchange for cash for you to inject in your deal.
Yes.
Which presents, obviously, that gets a lot of people excited, one. And then two, if you're a high net worth individual and you're making lots of cash, well, those tax credits could be very, very valuable for you to come in and do a project like this just to reduce your W-2 income or your small business income, or however, those losses can actually help out a lot. So
absolutely, and there's different structure opportunities, obviously based on the need with that, and then we also have the Bailey bill that comes into play that's going to offer those tax credits too.
Tell me about that.
And I believe it's a 10-year where it sort of freezes the current tax rate, if I'm not
okay, that's right,
if I'm correct, and It freezes it for about 10 years. So obviously, we all want to keep our taxes lower. That's more attractive. So if you're coming into a property like this and you're adding some renovations to it, that taxable value is going to increase, right? But with this bill in place, it's actually going to freeze it from where it currently stands for 10 years.
It's a nice advantage.
It's a lovely advantage.
Yep.
And so you know exactly where you're going to stand from a tax standpoint for a longevity, a long period. Yeah. And if anybody, if they wanted to pass it along to a new owner, you can actually freeze that for a new owner, which also looks attractive if someone's coming in to take over, do some rehabbing, and then wanting to maybe sell it. That taxable rate is locked in for 10 years. So that looks good from a resale standpoint.
And a lot of investors, they're not going to hold the property more than 10 years. Unless you're going to come in and be an owner-operator,
right?
Then, knowing what your property taxes are going to be for the next 10 years is absolutely huge.
Especially when you have as much land as you have here. I mean, obviously these older hotels, they don't go up, they go out. So you have more land mass too, which is another positive thing to have whenever you have something that's been around as long as the Towers has been.
I believe Myrtle Beach commercial real estate creates wealth differently than residential real estate because value is driven by income, operations, financing, and strategy, not just comparable sales. And in a market fueled by tourism, population growth, redevelopment, and migration, investors who understand how to improve operations and position assets correctly can create value far beyond what the average buyer sees on the surface. I believe Myrtle Beach's combination of tourism, retiree migration, and residential growth creates a unique commercial real estate environment where hospitality, retail, multifamily, and mixed-use opportunities can all benefit simultaneously. Most buyers focus on the property. Smart investors focus on the deal structure, the financing, and the upside potential. Before you move forward on any commercial property, let's walk through the underwriting together. Occupancy trends, cash flow, cap rates, expense ratios, reserves, financing options, and value add opportunities. So you understand exactly where the risk and opportunity exist. Call me now at 843-360-1737 and let's analyze your deal before you commit capital. All right, Joe, let's talk about being 35 years old again and starting over. What type of hotel property would you buy?
I would definitely. I wouldn't be interested in a bigger hotel. I'd like something small. That's where my success has come from now. And looking back, I wouldn't change a thing. Having a smaller property, it gives you some opportunity that a bigger place would not give you. So you can a niche in any market is a positive. So we've been able to create a niche with a smaller unit hotel, and it's been very successful for us.
Two questions for you. What is your niche market?
Ours are we cater families and couples.
Okay, families and couples.
And we're able to survive with that.
Okay. And then obviously that defines what you can be the best in the world at. You aim to be the best in the world at families and couples.
That's right.
And then you leave the other part of the game to other people.
That's right.
Gotcha. And then My other question is, you mentioned starting small, and you'd stay. You wouldn't go after some big, huge hotel. All right. So, is there any credence to the whole like tackling what you can handle where you are, and then maybe growing it, or like, is this a good starter hotel?
It is. It's a wonderful hotel. Its location is. I mean, people, our guests park their cars. They go to the beach. They go to Broadway at the beach. They go to restaurants. They don't have to get back in the car till they get ready to leave.
Yeah. Oh yeah. And guys, I can attest to that. The location is almost second to none. We're literally like a block from what I would call the heart of Myrtle Beach tourism. So, it's definitely, you're what, 5 minutes from Broadway at the beach.
Oh, yeah.
You're probably what, 8 minutes from the airport.
We are.
You're in the center of everything going on here.
We're in the heart of Myrtle Beach.
Okay, so just to backtrack, this hotel would be an excellent starter hotel for somebody just getting into the business. How many units do we have here?
We have 30.
30 units. So you wouldn't think that the operation's too much for maybe a couple that wants to retire at the beach and kind of lend their hand to owning a boutique hotel here?
Oh no, absolutely, it's perfect for that.
Okay, perfect. And then operations wise, I'm assuming you just have like a cleaning crew here that comes in, turns those units over.
We have 2 housekeepers and 1 full-time maintenance.
And that's it.
That's it.
Man, it sounds like low overhead to me.
That's right.
I like where your head is.
You can't make money if you're going to spend all your money.
There you go. Get it.
To be an opportunity to make it, you have to create that.
Okay, so what are the biggest mistakes you see new hotel investors making? I mean, you have to have seen plenty of hotels come up and go down over the last 30, 40 years here.
I've seen some hotels that's been bought recently, and owners, I mean, maybe they didn't understand hotel business. Maybe they didn't want to put that much time in it, but they let the level of management go down too quickly.
Oh, so
after purchase.
You're saying they hire a property manager to run it. They're kind of hands off. They're not involved in their own deal.
Right, and expect to get a paycheck every month. The old rule of thumb: if you show up for work, the paycheck will be there at the end of the week. If you don't,
well,
we all know that answer.
Nowadays, there's all this, if you surround yourself with the best people and, you let the best people basically do all the work for you. And I was recently reading one of Donald Trump's older books, Surviving at the Top. And he talks about how he took some time off and he was going to Paris to the runways, looking at the girls and all this stuff. And he had hired tons of great people, but at the end of the day, he was the only one that could move his company forward.
That's right.
And so you're saying the same thing.
There's an owner responsibility that goes along with anything. Just like if you buy a car, if the owner's not willing to maintain it, your neighbor's not going to do it for you.
Come on.
So
nobody's going to manage your investment as well as you will.
That's exactly.
Yeah.
That's the
Yeah.
point.
So any kind of crazy, insurance issues. In other words, basically people in Florida, they're all, investors in Florida are all, up in arms because insurance costs have shot up so high, their deals don't make sense. Your deal still makes sense.
We do. Our insurance policy, very respectable, and we honor, we've been in business since '73, and I think I've had 1 claim during that time. So our
amazing.
Insurance rating is good, and I'm proud of that fact, and we work every day to keep that the same.
No doubt. So what operational systems matter most in running a profitable motel? Like, I mean, are we talking staffing, pricing, maintenance, guest experience, online travel agencies? Are you guys using those?
We do not.
You don't use Airbnb, VRBO, and Booking.com?
We do not.
And he's still.
Hold on a minute. What?
Still, yes.
We actually did for a couple weeks, but I hate to say it on camera, the clientele dropped below our standards so quickly, we quit.
So
our biggest acquisition is word of mouth.
Wow.
It's amazing.
That's amazing.
And that's why we have 3rd or 4th generation, grown ups are coming back who as a child they were here, and now they're bringing their children, and children bringing their children. So it has a long-term longevity to
Now,
it.
I could see that in some investors' minds, their wheels are turning right now, and they're going, well, shoot, I could get that hotel. I could put it on Airbnb, VRBO, and Booking.com. I could increase occupancy by another 20%. But for you guys, that wasn't the right move.
No, it wasn't. Like I say, we tried it, and it was people who've been coming here for years would say, hey, they would call and say, hey, what's 209 doing down there? You know, they just
tough stuff,
experienced different than what they were accustomed to. So we put value in our repeat customers.
No doubt.
And we do whatever it takes to keep our repeat customers coming back.
So for you, the book of business that you had built was more valuable than reaching after a little bit of extra future growth.
Exactly.
Yeah, that's priceless right there.
And people like this just don't exist anymore.
Come on.
In the world of AI and in the world of everything being so tech savvy, you know, it's great to have, again, this nostalgia that he's built and this legacy that he's built. It works. It still works.
That's absolutely amazing. So, all right. So how much of this property's success came from operations versus location?
I'd say 50-50.
50-50.
Location is very, very important at anything you go at with real estate. And then management, how you run it, how it's presented. You're not going to present a dirty room and expect to have a satisfied customer.
Come on.
So you got to put in the time in order to get the satisfied customers coming back. You have to make that personal investment every day.
As an entrepreneur, location is a huge part of the deal. It's definitely something you can't get wrong because in your instance, it was 50% of the deal.
That's right.
At the same token, you can have the best location, but if you don't bring excellence every day, those guests aren't paying the bills.
Exactly.
Wonderful. Exactly. Wonderful. So what improvements created the highest return on investment over the years? So you've owned this hotel for decades. What did you do that kept it right?
Well, we try to take 4 or 5 rooms every year. Like I say, we 30 units, so we take 4 or 5 every year. Try to go in, keep them upgraded, keep a new fresh look in on the inside and outside. You know, unless you're going to bring in the cranes and knock it down, the outside's pretty much a maintenance. Maintaining it, keep fresh paint, keep things patched. When they break, fix them. That's kind of been our.
So I have to ask you this.
Over the years.
This is a personal question for you, you know, because my wheels are turning. So this location, second row. I mean, if 30 rooms could work here, do you think 100 could work here? Like if somebody came, knocked this down, and built 10, a high rise, 10 floors.
Oh yeah, absolutely. There's some bigger second row properties on the north end that's built back in the early 90s. They're successful today, so they've got 20 years under their belt, and they're still being successful. Second row is worth more than a parking lot.
For sure.
Most of these parking lots on second row that people see today were acquired back in the 80s and the 90s by hotel owners on the front.
Yep.
And it was a lot of, just about every when we bought in down here in 73, there was a building, a whole house on second row on every lot. And now it's pretty much a parking lot, but that was because you had older people staying in old homes that have been retired, and the opportunity come for them to sell, and the Oceanfront continue to buy them up.
So I mean, you just got me very, very excited. So what you're saying is this is a great hotel as it sits. If I were a hotel operator with a longer term vision over the next 20 years, I could buy this as it sits, run it, learn the business, and then maybe year 3 or 4 start putting together a plan to maybe enlarge it, make it even better.
There is an opportunity for that. Land around me, some of it's available, some of it's not, but there is some available that's close enough to expansion could take place.
Absolutely wonderful. Okay, so what part of hotel ownership is harder today than it used to be?
It's not any harder today. It's just you've got to be willing to give your time. That at the end of the day, the time that your investment in it is. If you don't have the time, you might not want to be in the hotel business.
Okay, so do you think online reviews helped or hurt you?
Online reviews, they can do both. That's why you have to work to keep your reviews. You want a guest to leave with a positive about your property. You don't want a guest to leave saying they stayed up all night and the people next door hooting and hollered and kept them up. That's just a level of management you have to put in any place.
Okay, so what you're saying here is on site at Towers Motel, even though Myrtle Beach is in my opinion, a little bit of a party or late night
It can be
destination in some parts, right?
It can be.
You don't see a lot of that here at this motel.
I don't say that we don't see any of it because people like to get on vacation and relax, but we try to keep it, let them know what our limit is.
Yep.
And we tell them, we don't mind asking them to leave politely.
Yeah.
That this sitting a fix for you.
Yeah.
And so we've had to ask a few guests to leave, but 9 times out of 10, the other guests appreciate that and they come back because of it.
Absolutely. I believe understanding Myrtle Beach seasonality is critical because investors who know how to structure around peak season cash flow, off-season operations, and tourism demand patterns position themselves differently than those buying strictly on annual averages. I believe the strongest commercial investments in Myrtle Beach are often tied to population migration, healthcare expansion, retirement growth, tourism demand, and lifestyle-driven consumer spending. Myrtle Beach is transitioning from a purely tourism-driven market into a more diversified economic market, and commercial investors who recognize that shift early may position themselves for long-term upside. If you're considering buying a hotel, motel, or short-term rental hospitality asset in Myrtle Beach, understanding seasonality, average daily rate, occupancy, labor cost, and operational efficiencies is critical. The difference between an average hotel investment and a great one often comes down to management strategy, operational structure, financing, and knowing where value can be created after closing. Call me now at 843-360-1737 and let's break down the numbers and identify where the real upside exists. Or a few questions. All right, Joe. So first things first, why are you selling this property?
Well, we've been at it since '73, and life only comes around once. So we like to two things. I like to do some travel, and my heart's always. I grew up on a farm, and we still have our farm out there, and I like to maybe raise some cattle. And,
come on, nothing wrong with that.
Get back to my horse days. We used to have raised up at horses, and see a little bit of that before I check out of here.
Right, no worries at all. Okay, and then what is your biggest concern for the future owner that buys this property, or for this property in general? Is it something going on in the city? Is it tourism taking a decline? Is it are there financial issues? What is the biggest concern you have for this hotel?
Myrtle Beach as a whole, to keep the families interested in it. Our competition, I mean, we're in competition with Florida. North Carolina is mainly a beach house destination, but Myrtle Beach, we're more commercial than North Carolina beaches, and In some parts of Florida, we're more commercial than them, but our competition's up there. It's getting the clientele, the owners operation going on that's willing to do the work and keep the fight up.
Yep.
And
Yep.
keep Myrtle Beach as a destination that's that can be viable in a market.
Yep. Yep.
And I think Myrtle Beach, in the history of it, if it continues to repeat itself, we're in good standing there.
So, what's the biggest lesson that you learned in all of your time doing hotels? What's the biggest lesson you learned?
People, communication. Everybody likes to be talked to as a person, not a number. Making a human connection with guests is 99% of it.
Yep.
And having that rapport when people call me, I know them by voice. I can say, hey John, how you doing?
Yeah.
How's the family? How's Lori?
Yeah.
And that means a lot to people. But treating people, this motel any management is a people business.
No doubt. No doubt. Is there anything that you underestimated or any pitfall that you stepped in along the way that you'd want to stop somebody else from stepping in that mistake?
Well, I've had my ups and downs. You just have to be willing to have that attitude, no quit attitude. When you find yourself in that hole, quit digging. Get out of it and don't make the same mistake. Don't make the same mistake twice.
All right. So, after 50 years in the hotel business, final question: what patterns do you see today that remind you of previous cycles? So I know that you've seen a lot of seasonality. What do you see today that kind of looks like things that you've seen in the past that maybe a savvy investor can get the jump on things?
Well, Myrtle Beach, any hotel being involved with the chamber, having a good, strong chamber is very important in any area you go to. If the chamber's not willing to get in there and go to work, don't shop around. Keep going.
Keep going.
So, Myrtle Beach has been very fortunate to have a good chamber of commerce that gets out there. It keeps our name out there. We've had weekends where behavioral problems exist.
No doubt.
No place is perfect.
That's right.
And if you're looking for the perfect place, then you'll never find it.
Yeah, or you're going to pay an arm and a leg for it, and it won't be a good deal.
That's right.
That's
right. Any entrepreneur looks at the risk and looks at the opportunity and goes, I think I can make some money there.
That's right.
Yeah.
That's right.
Yeah.
So, I think I'm very positive with Myrtle Beach and in this direction which we're going. They have to babysit sometimes on these weekends, and hats off to Myrtle Beach Police.
No doubt.
I have to babysit some of these kids down here, but that's the world we live in.
Yeah.
And they need to be trained.
Yeah.
They need to have limits.
Lots of people think that, there's a crime issue here. Well, it's honestly skewed. Like the crime comes from the tourism.
Yes.
Yeah.
Like, I feel completely safe here, raised my kids here, married, have a great life, don't feel unsafe being on Ocean Boulevard. And in fact, there are actually millions of people. We have between 20 and 22 million people that visit our market each and every year. It's the #2 vacation destination on the East Coast. They don't, most likely, the majority of them, in my opinion, don't feel unsafe to walk Ocean Boulevard. And
Absolutely.
if you just come, how many countless thousands of people have you seen walking out here?
Oh my Lord! It's just like one bad apple will ruin the whole
Come on.
bushel.
Come on.
Same thing applies here. The average weekend down in Myrtle Beach, it's perfectly safe. I'd walk out here. Me and my family walk up and down Ocean Boulevard all the time.
Yep.
But
All right, guys.
unfortunately, there is a factor there. Sometime in the springtime, these kids get down here and want to
Get a little rowdy.
Get a little rowdy.
Yeah, get a little rowdy.
And they find themselves over their head before they know what's going on, and that's unfortunate. But
It is unfortunate.
It
It is
is.
unfortunate.
Myrtle Beach is, for the most part, I've seen as a family beach, continues to be a family beach, and it continues to be our chamber's goal.
Love
Come
it.
on.
Yes.
So, guys, I want to show you just real quick. If you look here, that's the Camelot. Now, if I step out just a little bit further, you're going to see that's basically the heart of Myrtle Beach tourism. Directly across the street, we have the Shelby here, and then just a little bit further on up, down there. I know that you might not be able to see it, but the Skywell is down that way. There's Atlantica. This is a thriving area. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, because our market has been the fastest growing market out of the 150 most populated markets for the past 3 years. Over 90,600 people relocated to Myrtle Beach, South Carolina in 2023 alone. This means increased demand for commercial space like retail, multifamily, office, and industrial, and ultimately excellent annual profits and appreciation. Now, for retail, more residents equal more consumers equal higher rental sales potential. This drives up rents and occupancy in retail centers. For multifamily, higher population boosts demand for rental housing, pushing rents up and lowering vacancy. Now, for office, job growth typically follows population growth, increasing demand for office space. For industrial, more people means more consumption and e-commerce activity, increasing warehouse and last-mile logistics demand. Ultimately, the return on investment impact is higher rents, lower vacancy, and rising property values that drive higher net operating income and appreciation. I believe you should invest in commercial or real estate in Myrtle Beach, South Carolina, especially oceanfront hotels in the hospitality industry because of the 20 to 22 million tourists that visit our market each year, which is the number 2 vacation destination on the East Coast. High tourism equals steady demand, making it one of the most visited beach destinations in the United States. Our oceanfront hotels benefit from consistent seasonal occupancy, premium nightly rates compared to inland properties, and repeat visitors including families, snowbirds, and golfers. If you're a business owner thinking about purchasing commercial real estate for your company, the right property can reduce long-term occupancy costs, create equity, generate tax advantages, and strengthen your overall balance sheet. Before signing a lease or purchasing a property, let's compare your options and structure the deal around your long-term business goals. Call me now at 843-360-1737 and let's build a strategy that positions both your business and your real estate to grow together. Now, guys, I'm even closer to that Skywell. Look how close it is, all the action. All right, let's go through our pro forma on this. Your gross rental income. All right, now let's kind of break this down. I've got you at $833,333. In other words, that's the full potential you could make renting this property out with 100% occupancy. Obviously, it's not at 100%. Essentially, you got to account for a 40% vacancy. So $333,000 essentially is projected is sitting on the table. It's just that simple. So if the property's ran by repeat business, which it is, and word of mouth, because the owner told me so, if you added in online travel agencies and did additional marketing, do you believe that you could increase the occupancy on the property? I think so. Could you get to 75%? That's another 15%. Could you get to 85%? I mean, just imagine adding another 25% rentals to the books. I'm just saying, like, if the business models ran off of word of mouth, it's totally possible, highly likely, that if you added in online travel agencies, you would absolutely crush it. You'll definitely secure, in my opinion, more rentals than if you didn't have online travel agencies. Everybody at the beach uses online travel agencies. It's a no-brainer to me. Now, all right, so you factor in vacancy. You got 833. You take out vacancy, you're left with $500,000. I talked to the owner. He said that's totally reasonable, making $500,000 a year on this property. Operating expenses, we've got property taxes at $21,000. Other operating expenses, essentially, we've already covered them, so I just grouped them together. $251,832. Reserve, I'm saying you need to set around $5,000 a year aside just in case. That's going to leave you with a total operating expenses of $278,566. Now, if you have effective gross income of $500,000, you take out total operating expenses of $278,000, you are left with a net operating income of $221,000. But this is what I want to factor in. As an investor, you don't need an owner's salary unless you plan on running the business and want to pay yourself $100,000. So there's an extra $100,000 sitting there in a line item that we call seller's discretionary earnings. So ultimately, and this is just a part of it, it could be a lot of factors to sellers' discretionary earnings. There could be vehicle expenses, there could be salaries, there could be interest expense, there could be loans tied to the business that are more like personal loans and won't transfer with the sale of the property. Depreciation is a part of it. I didn't go into all of that, but what I did want to point out to you is, if the seller's making paying himself $100,000 a year, and you're buying this as an investor, and you're not going to draw that $100,000 a year in salary, well, guys, guess what? You can add that to your bottom line, and if you do that, I've created something called adjusted net operating income to account for that extra $100,000, adding it back in, because it's currently an operating expense, but really, if you're not paying yourself that $100,000 in salary, that can hit your bottom dollar. So if we've got a net operating income of $221,000, we added back in that $100,000 from the owner's salary, we're left with an adjusted net operating income of $321,000. Now, your annual debt service was $178,000 a year. So if I've made $321,000, I take out $178,000, I'm left with an equity cash flow to the tune of $142,000 just in that first year as it sits. That doesn't take into account any of the growth rates that you see in years 2, 3, and 4. You can see year 2, that 833 jumps up 2.5% to 854. And then in year 3, it jumps up again to 875. Those operating expenses jump up a little bit too, by 2%, using all of our growth rates that we've already talked about. So you can see here, owning this over 6 years, that equity cash flow starts at $142,000, goes up to about $189,000. Now, guys, we're right here at the Skywell. As you can see, we're in the middle of all the action. That was not a very long walk. You got your arcades here, you got all kinds of shops all around here, you got Ripley's, you got all kinds of stuff. And in fact, the boardwalk is literally just right there. I'm going to start walking back. Now, how close is that? I'm just saying. It's in the middle of all the... It's right here. It's right where you want to be for Myrtle Beach tourism. Now, cash on cash first year, that's 8.37%. Now, you'll see down at the bottom, I've got their total cash flow and returns. Now, that's going to be... There's an unleveraged, which means using cash to buy the entire deal, or there's leverage, which means using financing to buy it. So we're going to look at the cash flows from the deal from a purely, I bought this thing outright with cash only, or I contacted my lender and I financed it. So unleveraged, first you got to put in $4.4 million to get into the deal. It's the total cost of the investment. Then every year you got a cash flow of $328 the first year, $336 the second year, $343, $351, $359, and finally, in that 6th year, you're going to sell the property. That's based on our assumptions. You're going to sell it for the whopping, I think it was 5.7. Excuse me, let me see real quick. I want to know. What do we got as a sales price on here? Oh, 5.5. Excuse me. You sell it for 5.5, pay some brokerage fees. Plus, you got that year's cash flow to add in. And you got a nice bang right there at the end, hopefully for 5.7. That's going to give you an internal rate of return on this deal on those cash flows to the tune of 10% when it's unleveraged. Now, when it's leveraged, which a lot of people think is the smarter route to go, why would you sink $4 million in a deal when you could only sink 1.7 in the deal, use somebody else's money, and then use the bank's money to make money as your partner in the deal. A lot of people find that way smarter move. It is a little bit more risky. What are you going to do about financing in year 5 if you want to keep it and you don't want to sell it? You got to go get more financing. What happens if the interest rates are higher? Then you could end up upside down in the deal. There's obviously risk associated with every deal. These are things that you need to be thinking about. Now, leveraged. We've got 1.7 in the deal. That's the equity down payment. It's a common equity in the deal. That's your down payment that you're going to have to pay to get into this deal. So that's coming out of your pocket. That's why it's negative, because you're spending that money. Then after annual debt service, you got net operating income minus annual debt service is going to leave you with the equity cash flow. So on a financing, you pay that monthly payment, you pay that annual payment for the year, you're left with $150,000 year 1. Then $157 year 2, $165 year 3, $173, $181, and then finally you're going to sell the property. So you're still going to get that $178,000 in year 6, or some sort of version of that. If you sell it halfway through the year, it'll be half of that. If you sell it the first month of the year, it's obviously going to be a lot less. So you still get that cash flow from the time that you owned it on a pro rata basis, but then you got to factor in your net sale proceeds, and essentially that's your purchase price minus your loan balance. And in that year 6, that loan balance really hasn't changed at all. It's still that 2.7 mil, because you took an interest-only loan to finance this entire deal. It's that simple and that easy, guys. The internal rate of return on this deal is 16%. 16% if using leverage. Now, a lot of people will ask and go like, why is the IRR higher on a deal that has leverage and financing versus all cash? Well, you've got less money in the deal. If you have less money in the deal, the internal rate of return is higher. It's just that simple and just that easy. Give me a call. Stop sitting on the sidelines. 843-360-1737.